Hello, everybody. Today we're gonna take a bit of a different path to things. Let me just make sure I have this one thing sort of running before we get started, so later I'm not gonna have any issues. Today I decided not to open blasting music, as you can imagine. I think today is not gonna be appropriate to do so. So yeah, today no music, but I'm gonna start. I'm gonna let people join a little bit, and I'm gonna start going over doing our regular stuff. A bit of a complicated week. I'm sorry I was a bit MIA throughout this week. Those who wonder or not familiar, MIA, missing in action. I had a bit of a complicated week this week, outside of what was happening, on the geopolitical scene and all the whole war issue. There were other things. Yes, hello everybody. I'm sorry for not saying hello right away. Hello, Kay, Casey, Johnny, Adam. Good to see you, boys and girls. Of course, Thomas. Um, I'm well as I can be. I'm doing a lot better for sure. First time YouTube notification was quicker than Discord post. Interesting. Well, maybe finally YouTube starts to like me. Although it's weird because, yeah, YouTube doesn't seem like they really are cooperating. My channel technically is not monetized yet and all that wonderful stuff, although it should have been a while back. But it is what it is. Carlos, hello, good morning, Mike. Hello, everybody. So yeah, as I was saying, I'm sorry for being MIA. Let's go to the chart and stuff so we can get started. Sorry for taking so long. It's just that, like I said, I gotta cover all bases. So much money. I love Nvidia. Well, you be careful with Nvidia because Nvidia might disappoint you very, very shortly. Remember, Nvidia and other assets can drag out and just sort of play around these same ranges. We've said that we're testing basically the same ranges, nothing new here. You are still, if anything, more your actual structure. You can see again once you zoom out. Pardon me for all that mess. But you can see, if you're more objective about things, your actual range that is being tested is this, right? It's this area. So in reality, although I say S1 would be 110, and again, it's up to you for you to decide, right? It's kind of this thing. And I would more so argue, if I flip this chart and if I play a trick on your mind, and I would ask you, is the market basically bottoming out? Imagine this is completely upside down, right? And it looks like the market is bottoming out and trying to break that resistance to go upside, right? But it's the other way around. It's actually flipped. So you see, your biases allow you to think as if there's more room to go, when in reality what you're doing is slowly breaking in. All right, so let's go to do what we usually do here, which is kind of annoying, I gotta say. We spoke about this, how the market seems to be more too tame, right? Almost boring to some extent. No, why? Adam, look at it this way. While the market is permissive, the market makers, given the opportunity, given the time, I think the market makers are well aware. This is why we're getting this flat market. That's actually a very good point right there, Adam. Very good point. The thing works like this. The market does not have to be in. Let's say you and I are on a track, right? You're stuck with me. It's my car. I'm driving the car, and we got to some pit stop, right? And right now we're somewhere. And for some reason I'm an ass, and I'm saying like, look, we're gonna be, I want to do here something, and we're gonna be stuck here for the next half a day. So instead of being upset about it, you find how you can maximize the duration of period in which you dwell in that location temporarily, right? You're gonna find the best thing you can do. Same thing, the market makers will not skip an opportunity to squeeze out a couple more dollars moving in the same ranges. In fact, for them, this is summer camp. This is fun. So there is reason for that price action. It's the institutions, the smarter people, the people who are aware, quicker on their feet, have better conditions, whatever you name it, and can see an opportunity to squeeze out a couple more dollars, that's exactly what they're doing. They're not. Why not? If you would have been in their shoes, you would have done the same thing. I swear, Adam. That's the thing. Oftentimes, I like you guys to stop and think and process not just things from your standpoint, but from the standpoint of the market makers, their wants, needs, capabilities, and kind of combine all of that together into a singular equation, and then you're gonna see really what you would think that is the most probable thing to take place, right? The whole remember, we say it's not just the technicals, it's not just the fundamental story, it's the whole equation of everything all together, right? So if you take everything in mind, you realize that, well, no, why not? Nvidia, if you and I would have been sitting in the office right now and we see that we're going to be staying within a particular range at least for a while, testing it, we want to be able to sell off our older positions. You see, people often like to think about the situation as if we started trading here. You really think the institutions got their position here or here? Or no, it's a running position that is sort of evolving throughout the time. So given this opportunity, why not? You and I can see that there's a clear downtrend. We find ourselves testing these ranges. We understand that there's probably a rally to be had. Other institutions will benefit from it. We find that the harmonics pointing towards some form of head and shoulders, if you will. If you have a shoulder right here, right? Well, that's debatable. Well, where's the head? Well, it's going to be the shoulder, and we probably have two of them. And well, at the end of the day, just depends on which time frame you see the thing. We're at 45, not a very convenient time frame, but still you can kind of recognize that there is a formation here that hints at a head and shoulder pattern. So all in all, it kind of depends where you start from. And if you're an institution, you probably already had a rolling position for a while now, and you end up needing to liquidate, right? And to liquidate, you want to make the market rally higher. So you allow it. In fact, you push it a little bit, little nudges, amplify your position, doesn't matter. The cost will be mitigated by your profits. So, Joby, hello, good to see you. Alex, good to see you, brother. Let's see what Alex is saying. Here to support Greg. Thank you for streaming. Alex, you are a brother from another mother. I miss you a lot. You need to come and hang out with us in the voice chat more. My Canadian brother. Next step is to take notes and review them monthly. That, sir, is so correct. Boys and girls, listen carefully to what Alex is suggesting here. Take notes. Follow the market. The best way to notice patterns is to follow the market enough so you'd be able to notice the patterns. If you are, I remember when I was a junior back then, and I'm just going to make fun of my own self, back then when I started, many years ago at this point, and I used to kind of make fun with my peers. It's like, what are these people doing all day staring at the market? How much can you stare at the market? It's like, okay, you got the idea, you got the gist, you've seen your positions, maybe you've placed some new positions, whatever, but what are you staring at the market all day? You see, the thing is, you cannot determine anything about the market. Those who do not know the past, those who don't know the history, are doomed to repeat it, not learn from it, you see? So, in other words, if current, actual time, actual price action that is happening will be history in the future, boys and girls, you need to learn it and take notes. Very, 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 very important. And Alex, thank you so much for saying that. Yes, taking notes. Why? Because most people tend to forget things, within a couple of days, let alone a week, a month, and so forth. The more notes you take, the more, and you can take them in various ways. If you have the platform, the trading view that we're using in this instance, you can place a text note, right? You can find a particular date or particular point in time and price action and put a note, blah, 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 blah happened, right? Or blah, blah, blah took place. So, and there are various tools, of course, there's so many tools in this amazing software that you can use just to kind of place a line, a coordinate, right? A juncture, say, something here, write some text if need be. You can go here, add some text, right? You can see it like that. So as you can see, there are there are various ways to take notes, and notes are very important. The more notes you'll take, the better you will remember why something was happening later in the future. And yes, that's important. Like we said, people tend to forget things. People tend to ask themselves questions: why didn't I buy back then a lot? Why? Because you were focused on the world supposedly coming to an end. And if you think with that logic, it's like, yes, if the world is coming to an end, then you better be buying, because if you're wrong, then it's going to be worth something. If you're correct, then your money is as good as, fire tinder, so it doesn't matter either. So in both instances, it doesn't matter. You should be focused, or rather hyper focused, on what will yield potential, returns in the future, not what feels unpleasant right now, because again, you're just hyper focused on the wrong thing. Um, mm, 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 Smash the like, please, yo. Alex, you are a legend. Boys and girls, please smash the like and subscribe and bell, schmel, and all that great stuff. Because if you really want the community to grow, if you really want to help me, especially if the channel is not really monetized, so the only way to get it actually running proper and help me grow the channel, the community. Because look at this. I mean, on Discord, if we're looking on Discord, we are now at 19,000 people, right? 19,000! We're almost 20,000 people right here on Discord, which is amazing. We have plenty of public rooms, we have plenty of members channels, and a lot of great stuff, a lot of great discussions, a lot of value. The academies, I highly recommend looking into them. Of course, my academy right now is actually locked. I'm so sorry, the one-on-one. I don't even know if I'm preaching it to the choir and I just have my regulars here, but yeah, there's that. Investor, what are your thoughts? Thomas, no need to call me investor, just Greg. Just go with Greg, my brother. It's all good. What are your thoughts on current P ratio of the market? Again, it depends on where you look at, but P ratios, first of all, that's, for example, if we really want to be objective, that's not my expertise, if you will. We prefer to keep it to what we're experts in. PE, really, that depends on which company you're looking at. Some would look highly elevated right now. Just wasn't sure if highlights the message or not. Oh no, it's fine, Thomas. No, don't worry about it. Look, P ratios are a good way to measure, to see what's going on. Sure, but not always. Depends on the company, depends on the condition. We're at very abnormal situations, so PEs will end up being skewed. You have to accommodate just the way PE ratio sort of works. You'll not always get the proper reading of a healthy company or not. This is why I prefer to stick with the charting technicals. That way, it's not about how I perceive it, it's about how we all perceive it all together and what is the outcome. That is kinda, you mean S&P. What are we at right now? What are we looking at S&P? Overall market, it should be elevated. It should be highly elevated right now. So we should be on the high end. Yeah, I understood, Thomas. We should be high. We should be elevated because again, it's the combination of the overall market. The overall market is elevated, thus you come up with an average that is elevated. That's just how it works. No, okay. I mean, that's actually not that, but nowhere near as bad as I thought that would be. But again, these numbers are skewed and it doesn't matter. The P ratio will not change the technical. Well, the P ratio is already calculated by the people, and what we're looking at. But what's the beauty of the technicals? Technicals are the sum of all of our calculation. Elevated, most institutions. If you look again, you're looking at the S&P, but let's look at the companies that make up the S&P, right? So normally we would find a higher average, higher than normal, especially in the tech sector right now, obviously, which is also very indicative of a correction. But I don't like to look at PEs to take my indication of things. Oftentimes you can see contradictive signals, so that's kind of what I think, if that helps. I can discuss this topic in more in depth and explain my point of view and why I prefer to view the things the way I do on Discord. Join us gladly, Thomas. I'll explain. But you see that the beauty of technicals, as I said, they are the outcome of all of our perception and sort of everything priced in. And if you're able to measure, there's a cyclical nature more so to the market. And if you're able to measure it, you're able to understand it properly, P ratios won't matter. And that's the beauty. This is why I sort of ended up sticking with technical analysis, at least the charting bit. It is all technical. Everything that comes to numbers is technical at the end of the day. Even at the end, even reading the balance sheet properly. But I prefer with the charting method simply because it is pretty much the equivalent of dealing with what you can see out of your windshield as you drive, right? There's no better way to read traffic better than just looking at it. Awesome, Thomas. Then join us on the voice chat when we hang out, and I'll gladly explain. Well, I'll give you examples actually why P ratios can end up being skewed and the market can show something else. They can end up being lagging, just wrong altogether. So, not the best metric. It's good to consider it, right? You want to be aware, but it doesn't mean anything. I don't pay too much attention to P. You see, I mean, yeah, but the question is, are you aware of it? Yeah, Chobi, very correct. If a company is dominating a sector, then don't worry too much, especially long term. Correct. That is kind of correct. But more so, you need to remember that you can have conditions which end up skewing results, and you just end up with an effed up P. And what do you do with that? You're just basically what you're doing with that is you're permitting your bias. What is that any good? Remember what we're trying to do. We're trying to remove ourselves from any biases, and you're actually pumping more bias into your method. How does that make any sense? Remember, boys and girls, I told you last week this is going to be boring. It's going to be very boring. We're going to be just. It's going to look as if we're doing a lot. We're doing nothing. Let's go over it. You know what? We've been kind of hanging around for a long time, and we haven't really done what we usually do. I started the other way around today. Sorry, I'm gonna get back into the full swing of things as we go. I guess I was off for a couple of days completely, and had to rest, had to really recharge. These couple of weeks were insane. By the way, those who know. Those who are in the Discord, I was just about to go live, and as I was about to do it earlier, suddenly sirens popped off, and I had to abandon everything and run to the shelter and all that. So the craziness have not been over with yet. But let's go over the market. Let's go over the SPX as we like to do. As usual, let's go over the momentum and see what we're about to do. Although I'm saddened to report, I think today's live is going to be a bit short because of this. We are doing nothing. Wow. I mean, if you're not a trader, if you're not trading right now, and even that is just kind of iffy, I would recommend being very, very careful and taking the shortest term trades, just kind of in and out sort of thing. Be quick on your feet and very aware. And if you trade, you cannot be going to hang out wherever, rest. But the market doesn't seem. If we're gonna get this for like a month and a half till the election, that's gonna be horrible. But I got to say, it's starting to look like it. And it doesn't necessarily mean it's going to be all flat completely. We still have gaps to close. We still have this gap to close right above us. We still have this annoying gap to close, right? So we have some stuff to do. But if we're going to end up within, a couple of weeks from now, right? Looking backwards. Come on. That is Trading View. Come on. Come on. What are you doing? That's very unfortunate. Okay. Like the day refusing to charge. Internet issue, guys. Is my stream lagging? Doing something? Am I fine? Are we having an issue and I'm not aware of it? What's going on? Okay, no, it seems like we're fine. We're back to normal. All right. No streaming issues. Okay, just kind of got stuck, so I was worried maybe internet is dropping off. Maybe a rocket hit a main junction thingy box for the internet or something. I don't know. Anyway, so if we are kind of objective about this, look, we stalled right here, right above 20. You can see that. And I said this might happen. So on a downtrend, being bullish, giving us sideways price action. We are in a wedge. We might have that resistance of that 5089, or just call it 508, 5800, 5809, sorry, or 5800 flat, because psychological. We still have that. We know we've been running out of momentum and the flattening of the curve have been sort of showing for a while, but somehow we've been able to squeeze a little bit more, a little bit more, a little bit more. But notice that these squeezes end up being where we just kind of have impulses, right? This is not a true rally. This is more of a us running slowly, running out of momentum. How do we know we're running out of momentum? We've been saying that for basically several months now, and we're finally, well, for quite a long time, in fact, and we're finally at the stage where we're ready to break down, or basically the third impulse. Those who know this is very indicative, and just the structure within itself is indicative of a correction, because beyond this, we know we're already sort of structuring this downward trend, although yeah, we stretched it a little bit further. We know once this flips over, which we still have time for, we know we have 2 months and 25 days, this is what we were waiting for, it will become more indicative. Why will it become more indicative is because what we see here on the monthly, we know our weekly, our 6 months, our half year is basically an enlarged structure of the quarterly, right? It's that same, in fact, let me show you, right? If we kind of highlight just this little knob and go to quarterly, you realize, yeah, it's kind of talking about this. So it's just that partition, right? Just the partition of us breaking to the downside. And we know it's all actually very, very bearish. Why? Because of this. Okay, we've been talking about this for a while. This is our yearly chart. Those who understand what's going on, this is highly indicative of a larger correction. And those who understand what's up, this is a long, tedious process that can take, I kind of exaggerated there, 33, but yeah, it takes a while. It usually is a long, tedious process of just breaking to the downside. Takes about a year within itself, maybe a year and a half of testing the oversold territory. Those who've been around, we've kind of seen how long these processes take. Just to give you an idea, from breakdown, from peak to trough, you basically get 4,385 days. So that's quite a long period of time, as you can imagine, well, a multitude of years. And we're just getting started, right? We're just getting started. This is a comparison to 2000, the tech bubble, and the housing crash, okay? So that's that. That's kind of us rushing through the time frames. Nothing new. What's going on with my trading view today? It's refusing to cooperate well. So nothing all that new, but it's starting to seem like the market is basically pretend moving. We're mostly going to be doing a lot of sideways, nonsensical, boring price action that is going to lead to nothing, and we're going to look back at it on the daily time frame. We're going to say, well, that's nice. So we flipped over from one trend to the other, back and forth, almost creating this flat structure, right? This is how we almost end up going sideways while end up testing basically all that crap will be about testing the same range, right? All of that stuff. That is that. So we've been seeing this for a long time, and I warned you about this, by the way, last week, that if I'm right, this is starting to seem very, very bad, and it looks like they want to try and drag it out all the way to the election. Why politicize everything, and why the market's so highly dependent on, the outcome? Things that we don't see behind the scenes, I guess. There's another thing that was quietly going on. Nobody noticed. Oil is creeping up back to 77 right here. We were, as you can see, as you can tell, nothing is just linear. We end up sort of testing back and forth certain supports and resistances, right? So we basically go up, test, break down, fail. People, oh, Greg, you're wrong. We're going to break down. No, that's not how shit works. Really, how shit works is we end up testing, confirming, rejecting, continuing. Right now, as you all can see, we're back to 77. That's something I've predicted to happen. I told you that as unpleasant as it is, this entire sort of correction, right, this pullback, this actually was just a pullback based upon new reserves that were found and the market being sort of getting this high confidence, and technicals ended up being spilling over to the point where it just squeezed all the bullish momentum it had, so it had to go for a cool off, right? It was pushed into a corner, so inevitable, and we said it's going to retrace back to these high 70s, potentially 80s, as we continue to go and as geopolitical conditions become less stable and we see a little bit more turmoil. The more we see of mess, basically, the more war noise we hear, the worse shit is for oil. And you're all good. No shame. Yeah, thank you, boys and girls. Thank you. Manage. Christoph, good to see you, brother. Hello, lovely people. Make sure to like the smash and bell the ring for Greg. Christoph, thank you very much. I appreciate that, brother. You are a true legend, and yes, I would tremendously appreciate if you could contribute. It is goddamn free. The like button is free. No reason why not. As a friend of mine, Old Smokey, says, thumbs up, thumbs down, don't matter. I say thumbs up, why not? I mean, even if you don't like me, look at my pretty face that you can't see right now. So there's that. Yeah, look, I hate to be this sort of boring, uninformative, having this the live not being as exciting as we usually do. But yeah, well, we spoke about all this stuff. Also, Tom told you guys, look, this is abnormal, right? We usually do not have such movements without having corrections. We're definitely in agreement on that one. It's just that my assessment for the pullback and overall crash will be far bigger. Yes, the fact that I don't use the word crash in my title anymore doesn't mean I don't think there's a crash. There is a crash coming. It's inevitable at this point. Literally, even if Donald Trump somehow succeeds finally and survives into office, he would literally need the equivalent of having fairy dust, right? Or some magical powder to just make things better, right? Rapidly, it's impossible. The conditions that were brought about by the Fed, by inflation itself, by ourselves, by the Biden administration, the Democrats, if you will, you name it. There are so many factors that played into this slow demise and breakdown, and of course the outcome and ripple effects of what happened during 2020. All of this stuff is inevitable. If you light your house on fire, run out, and you stand outside, and when the firemen arrive and you're like surprised to why the house burned down, sorry to say, Arthur, good to see you, brother. I missed you so much. No sound, or is it just me? It is just you, I think. Yeah, Arthur, it's just you. My God, lucky for me, Arthur was not the first one, otherwise that would have been hilarious. Cool, it's just me, lol. Hey, Arthur, good to see you, brother. Thank you for joining. I appreciate you joining in. I really, really miss you, hanging out with you. Arthur is a student and a friend of mine. Yeah, always sound my right? Yeah, that is true. So all in all, I mean, those who are hyper worried, and we spoke about this. Hey, Cristiano, Cristiano, good to see you, brother. Cristiano de Nuno. No, you see, you see. Um, uh, Last week, Judy asked me, should I be selling? I say, boys and girls, if you're not proficient at knowing how to do these processes, don't. Do what Tom says. Be focused on finding the lows to make your average better, because at the end of the day, most of us look at most of these assets as a long term hold, right? Until we see true returns in the hundreds of percents, right? Thousands potentially, pardon me. So if you are not ready, not trained, not aware how to measure, how to find the cyclicality of the market, how to find the proper supports and resistances, recognize where the momentum is headed, don't. Don't trade. Don't swing. That's not what you should be doing. If you were lucky in life to be able to afford whatever and you just suddenly decided to buy a helicopter, does that mean you're ready to fly it? No. You're probably going to end up crashing, within the first 5 seconds, right? At best. If not just, making it explode somehow. Finding a way, right? So, or just killing somebody somehow. So, you see, if you're not proficient and you don't have the necessary skill set, avoid in doing that. Focus on what your skill set allows you. If you are in the community for long enough, you know how to recognize when the market is too high. You know when the market is relatively low. It's not that difficult. Buy, spread around. Again, not financial advice. You do what you think is right. Let's be clear about that. But Tom and I, the way we strategize, the way we do these things is when we are not sure, and yes, by the way, I also can be confused about what the technicals are showing me. And in that case, you know what I will resolve to? Simple. I will find the 52-week low and start buying. You see, these methods are uniform to both Tom and I. You know why? Because 1 plus 1 equals 2 on all languages. That's the beauty of math. That's the beauty of, running and managing properly a proper portfolio, if you will, right? And that's just the way it's done. Pardon me for that. Had to clear my throat. So, you see, don't get over focused and don't allow your emotions to come in the way of logic. There's a reason why we keep on repeating these quotes and sentences, by Baron Rothschild: when the blood is in the streets, buy, right? Even if the blood is your own. It's because we know we've dealt with people for many years, and we know that no matter how many times you repeat it, when people's fight or flight response is not identical to everyone, and some will freeze, right? Will not do the right thing. So we want to drill that into your brains so you guys will remember it when the right time comes. And if you have the right skill set, it doesn't also necessarily mean you should be, buying right away or selling right away. No. You just have the skill set to measure and decide whether you want to take that risk or whether you want to adjust. Consider taxes, consider everything, right? There's a lot to consider. Consider your liquidity, consider your risk aversion, consider your overarching longer term plan, because that's what matters the most. The Maslow Wix has been pumped by lunacy, in my opinion. No, Chobi, it's not lunacy, it's FOMO. And we spoke about this in the community. We said how the institutions will condition. Hello, Jason. Good to see you. Not sure if you're a regular here. If you are, welcome. If you're not, welcome. Good to see you. Have a good morning, sir. It is the part of that conditioning. It's not lunacy, Joby. It is the market in its completely regular form. If you work if you would have worked in the market for an institution long enough, even on days that you know what's happening behind the scenes before everyone, at times you will realize that it's, people end up calling that manipulation and feel good with themselves as if they, solved the biggest mystery in the universe. No, that's not how it works. You can call that manipulation, but it's not. That's just the regular, natural flow of the market. The market is an entity that is comprised out of, millions of traders, plenty of institutions, plenty of bots, and everybody is pulling the bad sheet a little bit to their side, right? That's just how it is, all at the same time, and doing all sorts of things. And what we get is an outcome of everything. So it's not lunacy. What we are getting is actually a very natural behavior from the retail trader and the abuse of the institutions, because that's the most convenient situation for them to liquidate. So no, that's very, very, that's the organic way of the market doing its thing, and you get to observe it, do it. That's it. It's all that simple. It's not lunacy. Joby, you know what lunacy, really, the biggest lunacy thing, I guess we people, and I do, I guess we're all at fault sometimes, is it looking at the market and saying something is lunacy. Where is there a law or a rule that says so that something is an abnormality? Even if you have a certain statistic of something repetitively doing something, how do you know that statistic? Let's say we know the market has done something 4 times repetitively for many, many years, right? So we know that thing is repetitive. And we say, well, based upon the previous 4 times, the 5th should be identical. Makes sense, Shobi? Right? But how do you know that the structure of the statistic is not gonna, let's say we have a time traveling machine, we go into the future, and our own selves tell us that, you know what, guys, you were wrong. Actually, turns out, every 5th time, the market does something completely different. But for that, you have to go through the 5th time, make it to the 6th time, and through it, and in fact to the 7th, 8th, 9th, 10th, 11th, 12th, and 13th time, just to verify that statistic. So the statistic, as long as it's ongoing, we cannot be 1000% certain off of it, right? So we have to double it, at least that. Good evening, Danny. Good evening, Danny. Good evening, indeed, sir. Good evening. So you see, Chobi, it's a little bit more complicated than just saying, it's lunacy. It is actually far more normal than people realize. The problem with people's perception is the inability to zoom out far enough to perceive the cyclicality of the nature, nor have the measuring tools, nor understand how it's done right. It's those who are survivalists here know there's a method of measuring distance with beads. God knows I hate that method. It just doesn't work for me. I just do it a lot better. I swear, eyeballing, distances works better for me instead of using the beads. I swear. Some people are so good with that stuff, they can almost, go down to the point of the meter, foot, whatever, you're measuring with, right? So it depends on your skill set and your abilities, basically. And most people do not recognize this as being normal because they're not familiar with this. They haven't been long enough in the market, nor perceive these things. And even if they were not seeing it from far enough to recognize that it's the same pattern. You see? So kind of take that with a grain of salt, if you will. But I would not call it lunacy. I would call it normality. Just oftentimes people are not recognizing that this is normality for the market. They immediately jump to conclusions. Oh, my thesis is wrong. We went 1 millimeter above, 1 millimeter too far. Here, you just saw a junction of 2 trend ranges, right? coming to fruition, playing out the role, but the market cannot prevent itself from slipping out of the ranges. You literally saw it right in front of your own eyes. Why? Because this bus is being driven by millions of people all at the same time. The outcome is not going to be precise for anyone. You, me, no one. Yeah. And, people are going to be biased right now. Look, Greg is right. The market is crashing. No! This is normal. This is just everyday trading. This is not indicative of nothing. Nothing. Look at the range. We're doing nothing. We're just testing the high range. God damn it, I cannot draw to save my own life. Tom! Mr. Tom! Greg, tell them what we talked about yesterday. I'm not sure, my brain is mush right now. We spoke about a lot of stuff. We spoke how, well, actually, we spoke how both academies basically complement each other, how both methods complement each other. There is a flaw in the fundamental analysis, right? It's not a flaw. It's the same way I say I have blind spots when it comes to technical analysis, because we can kind of see, we can predict the short term of everything, but the short term of the long term is the long term of the short term, right? But in between these time frames, there are certain blind spots, and we see them. We like there. What is a blind spot right now will not be a blind spot later, right? It will sort of resolve itself, but inherently, both methods have blind spots, and the way, first of all, one of the reasons, another thing to throw in, I don't know if Tom, you were here earlier, I was just doing this whole preach thing. I was preaching about how when you don't know how technicals work or you don't know the methods, you should do what Tom is saying. And sometimes when I'm not certain about what the market is telling me from the technicals, I do what we do. It's the same methods, they're uniform. We approach the market in a very similar way. And our overarching sort of overall perception of how things should be done right is larger trades, is longer duration, right? It's, call it trades, call it investment, whatever. It's just jargon, guys and girls. It's just jargon, bullshit, just words, right? At the end of the day, we're all long-term traders, right? We trade. We're not, if the market is going to be shit, unlike Ron Barron, we will sell our assets, right? If the company is breaking, Ron Barron will be buying more. Right, his conviction, his process is very different. He's gonna be, giving his grandkids these stocks. So go back to focus, okay? Just to refocus on what I was saying. Tom and I really work well together, and our community works so well together because our methods fill in the gaps, the holes of both methods. If you're not sure, you can always DCA into the asset. If you're sure about the asset, right, but not sure about the process, DCA into it. 52-week low, boom, problem solved. We're high, don't buy. Buy less, whatever, right? These sort of things. Also, people are black and white about liquidating. How should I sell? Why everything? What about what happened to the 30%? Right? What happened to that? Well, why do you have to sell everything? How about maybe just trying to liquidate to get your initial investment, right? As Tom and I continuously preach to you guys, which is a completely brilliant way. There are so many ways that you can approach your portfolio. But let's get back again, refocus. The methods that Tom and I preach fill in these holes. And what fundamentals cannot tell you about the short term and how you should maybe DCA into the asset, or maybe lead into how a lot of people here do options, right? And you can sort of find yourself buying into an asset at a lower price in a far more convenient way. Wink, wink, Arnold, Tim here knows. Plenty of our guys do that stuff. They really end up having like stupid lows on their individual assets, including Palantir and everything, right? So the way we say is that these methods really complement each other is if you're able to know technicals the proper way. This is why it's so important to, sign up to the academy, technical academy, when it has spots, to learn how to recognize these patterns, how to recognize these in between processes. So even when you're looking at the asset on this structure, right, on the 12 months, and you're saying, you know what, Greg, well, I don't care about none of this, right? Because my plan is to sell or buy, right? Or, I'm planning to buy throughout the whole range, and because I'm planning to sell somewhere here. But wouldn't it be smarter if that's the whole range? Wouldn't it be smarter if you, instead of buying here, which is kind of at the peak, you would be buying here at the trough, right? Or potentially wherever it's going to be, or recognize where these impulses are going to be, how they're going to look like, whether they're going to happen altogether. Maybe Greg is wrong. I mean, if Greg is wrong, the same old tools will prove that Greg is wrong, but you need to know how the tools work, right? So I think what Tom is speaking about is how Tom and I both, we all know and recognize that these methods complement each other. And right now, going through what we're going, with the uncertainties that we're having, with the structure of the technicals, with the overarching bigger kind of picture of things, right? At first you see blue because you're too close, and you think yourself, well, it must be water, right? And then you go back and you realize the painting has no water in it. It is actually a painting of a dude wearing a blue jacket, right? But, well, you saw blue because you were too close. You need to zoom out. You need to see the big picture of things and understand how these cycles work, why they work the way they do. The question why is very important. But if you don't know, that's when we apply, or you're not certain. Conditions can be very confusing. Boys and girls, Tom here can tell you, I predicted things and we're not able to execute on them perfectly. The rest of our OGs here, the veterans in the community, can tell you, there were plenty of things I've predicted and messed up on executing them, right? I messed up doing certain things. It's just the reality. Now, I would highly advise, right now my academy is locked because it's full. Tom's Academy has plenty of spots. Tom, I think I have your link of your Patreon available to me in my clipboard. Give me a second. I'm gonna try and if I can find it real quick. First of all, I'm gonna post, those who don't know, the link to our Discord. Well, let's do this. Okay, it's gonna be like that. That's mine. And Tom Nash's is gonna be, I think it's gonna just be like that. It's like that, if I'm not mistaken. Just should be like that. Yes. Just should be identical to mine. Just Tom Nash. Those are both Patrons. But Tom's Patreon. Don't look at mine. Mine is not interesting right now. Look at Tom's. Actually, I've done a mistake here. Go to Tom's. Tom's has an academy right now. Spots for the academy. The academy will be locked, right? But learn Tom's methods so you can combine later both methods, know how to evaluate a company properly, and know whether you want to DCA into it in the first place, what are the overarching larger ranges, and then start focusing on the sort of minutia of the market, the granularity of things, the zoomed in stuff, right? I'm assuming, Tom, you were talking about that. I went on a whole long tirade and rant. Probably Tom is probably face palming himself. He's like, God damn it, Greg, you're a whole horrible YouTuber and stuff and things. I'm sorry, I know, but I tried to do my best. I think that's what we were talking about, if I'm not mistaken. That's what you intend. I mean, we spoke about many things, but that was what we spoke about. I remember. Once I'll have spots, boys and girls, I will post on Discord. I'm thinking on changing the schedule right now a little bit because I'm kind of back on my feet and back to normal schedule. So I might have some new open spots, but we'll see. For now, that is locked. Focus on signing up to Tom's Academy. That way you will learn how to see the market, how to analyze individual assets, find their true value, understand whether they should be invested in it altogether, what kind of companies they are, and then expand to learning technicals, and it will give you a full skill set, right? It will allow you to be able to see what the upcoming week in the market, the upcoming month has in store for you without relying on talking heads like Jim Cramer and all sorts of people. And in fact, not just necessarily relying on Tom and myself. You'll be able to rely on yourself. You'll be able to listen to whoever you want and rely on your own choices. That's the beauty of the skill set. Tom, tell me if I'm a complete and utter moron, or did I hit the spot? Did I say what you wanted me to say, or speak about, rather? There's that. What are we doing on a smaller time frame? We're really doing nothing. Nothing all that interesting. Yeah, a lot of sideways. A lot of sideways. Remember, also, boys and girls, based upon Tom's method, right now you should not be buying. You should be looking for a pullback, right? Palantir and all, doesn't matter. Affirm, Palantir, all of them, right? We know how it works. We've done this. We've gone through this so many times. Tom has told you many times, do not buy when... you do whatever the hell you want, right? We're not here to tell you what to do, but not financial advice, blah, 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 other words and other interesting statements, but, it's not a joke. Do with your account what you would advise your kids to do with theirs, pretty much, right? And would you advise your kids to buy right now if the price is pretty much, it's it's a 3-year high, I think, if we're really combining. The last time we had it was like 4 years ago at this point, or like 3 years ago, really. Was after waiting. Mike, look, it takes time. That's why even I tell you oftentimes, I don't time the market. No one, a true expert, doesn't time the market, and just insane people like Arnold and Tim who do options try to. Okay? And even their actions are predicated and based upon technical analysis often. They understand the risks that are involved. They understand the methods. But I myself am not timing the market. I'm looking for... I'm the cipher of the unit, right? I'm looking for mines, and wherever I locate them, I mark them and prepare the conditions of how we deal with them, if you will, right? Bomb squad, if you will, whatever, cipher, So I don't try to time it myself as well. We focus on the levels. We focus on the momentum. We focus on the supports, resistances, this tool set, of course, and things that are far more sophisticated than just looking at stochastic RSI and looking at a couple of trend lines and a couple of supports and resistances. It's a lot more complex. Give me a sec, boys and girls. Bear with me. All right, well, I think we've covered... the market is more bearish than anything, as we know, so nothing all that new. We kind of know what we're prepared for the upcoming week, even if, something happens to me, you guys and girls are good, right? We know we're far more bearish than anything. But all in all, it's not really bearish. It's just kind of a fake out. We're more like, look, for example, the 45. Look at this. That looks bearish, right? No, that's not. That's bullish. It doesn't nowhere near looks like we squeezed out all that momentum, right? There is still some transition back probably to the upside, and only then a breakdown. Come on, work already. right? We're still dwelling on the upside. We're not all that far, not necessarily departed, although that is bearish at face value, but not necessarily. We want to see this transition into the body of the stochastic RSI of the indicator before we are more certain of that. In fact, we might retrace back up, do this a couple more times, and only then break down, right? And that will result, actually having dominant bearish over bullish will result with this sort of sideways upside weird thing, which is kind of squeezing itself into a wedge that is not all that surprising. Again, burning more time. We know we spoke about this potentially can be something that will be squeezed out all the way to the election outcome. Check ABT. Yeah, I guess we can. What do we have on ABT? Okay, let's just give me a sec. Sorry for that. Give me a second. It's kind of distracted there for a second. Yeah, no, it's obvious. So it's lagging behind the main indices. Sort of, yeah. It's pretend doing its. I see. So you obviously can see. So you've moved from the top range, right? You've tested your top range, similarly to the indices and so forth. The indices are here, and you're lagging behind. You haven't completed that whole movement. You're having this head and shoulders. You're testing that resistance, which gets you 130 area. 130 area. Ta 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 ta. Shoulder is the but then again it's starting to break, so your weekly is already starting to break. That completes this, that brings you to here. That here is not weirdly this, so well, again, I'm exaggerating. I like to exaggerate this way, more like this if anything. Yeah. And that is good for you. You're highly related to the S&P. You're basically tied in with the S&P, with the indices, and it's a matter of time until you have a breakdown. The problem is your breakdown is not gonna look identical to the S&P. It's not gonna necessarily come, so that the structure is not gonna look identical. You're gonna break when the market does, and if that happens tomorrow, you're not going to complete that head and shoulders that we just spoke about, that inverted head and shoulders. It's not going to be completed. It's basically going to get stalled and die. Like this thing is not going to complete. Right now, you still have to have your shoulder, right? One way or another, whether here, here, or here. That's kind of the three potentials, if you will. And yeah, no, you're probably, if the market will break soon, you at best you make it to that same resistance here and break back down, which still results with an inverted head and shoulders. But that's, I mean, downside one. Yeah, you don't have a lot of momentum left in the system, like everything else, right? It's so weird. Everything that is tightly locked with the S&P will, or the indices will result in a very similar behavior. Doo-doo-doo, doo-doo-doo. Finally, look, we said that. We check ABT. No, sure, Leo. Leo, you know you can ask me. Look at ABT on Discord. I can do that with you there. It's just that we know a lot of the assets right now. That's why we're so hyper focused on the indices, because that solves you all the problems. It tells you all the answers of all the things that are related, even they did not perform as well as the rest of the sector, right? The reality is that even if usually you're going to be looking at the higher, at the current range that your asset is in, and potentially the next set of 3 supports and resistances will are R1, R2, R3, which of course R1 once crossed becomes S1, but it's just this back and forth game how resistances transform into supports, but you get the idea. It's rather basic. All right. Well, boys and girls, I need to run. I do have sessions to tend to. I think we've done today a decent session. I'm not even sure how long it is. It has been, but right about an hour like usual. All right, so you see, I'm getting back on my normal schedule. Like I said, I'm trying, guys. You need to, boys and girls, forgive me. These couple of weeks were really rough on me. I'm just getting back on, to the normal schedule, so I might be slightly off, but I'm gonna try and do my best. Good chat, Robert. Always, Robert. Which Robert are you? We have so many Roberts at this point. And all of them are awesome. So I'm about to give Roberts, you rule, all of you. No joke. All the Roberts are great. Whichever one you are, join us on Discord. We're gonna have a blast, Robert. Lucas, hello. Yeah. Shout out to you. Shout out to all of you. Jason, Danny, Arthur, Chris, Adam, Leo, Gene, Adam, I said Alex, Mike, Carlos, Rotaru. Rotaru, that is such a strong name, man. Rotaru Sergio, man, you must be Italian. You guys have the coolest names ever. You all sound like assassins. So we have our Rotaro, Casey, Johnny, Leo, Thomas. Shout out to all of you legends. Big shout out. Salute to you all. You all are amazing for showing up and hanging out with me. That actually helped me pull through last week. Christoph, by the way, how did I forget Christoph, my brother from another mother? Yee. Tom, of course. Tom is literally my brother from another mother. The dude I am he's done for me so much that not even some relatives of mine done for me that much. I gotta admit, a true brother. Thanks from Brotherhood. Yeah, hell yeah. We're gonna have to we're gonna have to banter on that one, Christoph. A lot of Cristiano. Sorry, we're gonna have a lot of banter on that one. Thank you, Greg. What do you mean? You're a true legend. Nah, you are. You all are. This is not a joke. That's it. That's it, boys and girls. I think time to close it up, to wrap it up, right? I'll try to do my best to come back later today. My father is having a birthday today, so I don't know if I will. It's, although we're not necessarily celebrating his birthday today, but I do have some things to take care of. But I'm rather sure I will do an evening live, so don't worry about it. Don't worry about it, boys and girls. I'll see you a little bit later. Just in a couple of hours, right? Just soon. You all have a good evening in the time being, and I will see you a bit later. Bye for now.